And you feel like there's not enough now focus on Lightning. We need to get a little bit more attention to it.
At least outside of the Bitcoin ecosystem. I think that there's still very little awareness of Lightning, how it works roughly, what it means.
Yeah, so if Bitcoin is the best ledger, then Lightning is perhaps the best payments network in the world. And I think we should get into why that is, because the more I understand about Lightning, the more I understand about the traditional payment networks and how they can stop or block transactions and the way they add fees. If Bitcoin had a dollar stablecoin on it, it would be a big threat, I think, to Visa and Mastercard for their debit networks.
I think so. And especially, the first couple years of Lightning is very low liquidity. But we've hit kind of a critical mass now where it's quite liquid and the wallet solutions and things like that are pretty good. So even though there's still work to be done, there's still limitations, there's still privacy improvements that can be made, this is now a very workable system with a very strong network effect. And most macro kind of institutional size entities will dismiss it or not even have heard of it because, total locked Bitcoin on it is, a little over 4,000 Bitcoin, which as of today is something like, $100 million. It's peanuts in the global scale. But I think if you're looking at how it works and seeing that it gets better every year, and you're seeing the growth rate and the rise in liquidity, I think we're reaching that critical mass. I think we've reached it basically at the beginning of 2021 or so. And I think now we're firmly into the point where it's just increasingly usable system.
Can you explain to me a little bit how the Visa and Mastercard network works and some of the inherent flaws in it that Bitcoin maybe solves?
Sure. So Visa and Mastercard and payment systems like that are not settlement networks. You're not doing final settlement. They're a layer on top of a layer on top of a layer.
Another ledger.
Yeah, it's another ledger. It's basically a way for banks to agree. And so Visa and Mastercard themselves don't carry debt. They're just operating the mechanism for banks to come to this consensus. And so when we look at, say, the U.S. banking system.
Oh, hold on a second. So that's kind of interesting. So they don't actually control any money. All they're doing is telling each bank what they have to settle with each other at the end of the day?
They're basically an IT companies, yeah.
Huh.
Whereas American Express and Discover, they are both those systems, but then they also are their own bank. So they hold debt as well. Whereas Visa and MasterCard are networks.
So basically a communication network for communicating what people owe each other.
Yeah, yeah.
Huh, I never knew that.
I never thought of it like that.
And so and how does that tend to work? Is it immediate settlement they're telling people, or is there end of day settlement that, do they, I don't know, if you've got two banks that say, well, you owe this one and you owe this one this, and they just settle? How does that actually work?
It's changed a little bit over time as settlements gotten a little bit faster. So that part is malleable, but it's not instant settlement. And basically, so there's when a bank issues a card,
yeah,
they're the ones taking on the risk, really. And so you have that bank. You also have the merchant's bank.
Yep.
Right. So you have both the cardholder's bank, the merchant's bank. You have the network in the middle. You have a bunch of intermediaries along the way, and everyone has to get their fee. Right. So one, it's not a super low fee system.
Mm-hmm.
It's efficient. It's workable. A lot of times we happily use it instead of cash, but it's not a free system. There's pretty high fees. And then number two, they rely on settlement networks like Fedwire for the actual gross final settlement. So, any given day, there's like countless millions of transactions, and they're not actually sending money back and forth each time. They're kind of reconciling at the end of the day or every other day. It changes over time, but they're batching multiple transactions together into final settlements that happen over settlement networks like Fedwire.
And so what did Fedwire do itself?
So Fedwire is operated by the Federal Reserve.
Okay.
And that is a gross interbank settlement system. So basically what that does is it handles a relatively small number of very large transactions, and that's final settlement.
Final settlements between the banks, like leveling up what bank should have what at the end of each day.
And there are other systems, but that one's huge. And so roughly speaking, every year, you might have 200 million payments, which is not a lot for a whole economy the size of the United States. But it settles hundreds of trillions of dollars worth of value because it's gross value, and it's each transaction is millions.
And what happens with the international transactions? How does that work? Is that a similar thing?
They use Swift system for communication, and then different heirs will have different settlement networks.
Right,
yes.
Like equivalent to Fedwire.
Yes.
Okay. And in terms of the middlemen who are taking a little bit of a cut, how many different people are taking a cut of this?
Well, you're having the networks take a cut. So Visa and Mastercard take their cut.
Yep.
And then you also have the merchant bank. So if I have a credit card and I'm buying something from you, your bank is taking a cut for accepting that card, and then my bank is taking a cut, and then the network is taking a cut. So there's multiple people. There's at least 3 parties along the way that are taking a cut.
And as a percent of a transaction, do we know what that kind of comes to? Is it like 3%? 2%?
It's like somewhere around 3%. It'll vary a little bit based on the network. But yeah, it's around 3%.
So, yeah, I mean, so if you're spending hundreds of thousands of years £100,000 as a business each year, you're paying thousands in fees.
Yes, I mean, the way it's normally constructed is that the merchant really is paying the fees.
Okay.
So the user is not really paying the fees, and if anything, they're often getting rewards that entice people to use them, which entices merchants to accept them. But that's often why you'll see merchants have a lower price if you pay in cash, because they're basically, if they accept cards, which they pretty much have to do if they really want to get most business, they're paying a pretty fat fee on that. And so that's really where the fee comes from. But of course, if the merchant's paying the fee, it really means that the price of their product has to be high enough to take into account that fee. So the consumer is still paying it by paying slightly higher prices at the merchant.
Yeah. Well, I noticed with British Airways, they charge a different fee depending on the card issuer as well. I think Amex, you pay a higher fee.
Yes.
And also if it's a corporate debit card, you pay a higher fee.
Yes.
I've seen that as well. Huh. So what are the biggest flaws you see in the system outside of, I mean, firstly, it's expensive because of the fees. Are there any significant flaws?
Well, 2 main flaws. One is that it is just a layer on top of a fiat currency system.
Yep.
So it's inflationary. And number 2, it's permissioned.
Sorry, how is it inflationary?
Well, because it's all based on moving dollars or euros or yen around. This is not, it's not its own unit of account. It's
right. Okay,
it's a layer on top of
an inflationary system.
Of an inflationary system.
I thought you meant the actual system itself is inflationary.
Oh, no. Yeah, it's just moving around inflationary units.
Yes.
So that's number 1. And then number 2 is it's permissioned. It's a walled garden, basically, that you have to have access to. You have to be given access to it by financial institutions.
And you can be removed from it.
You can be removed from it either, even from a top-down way. If you're in an authoritarian government, they can be like, people that meet this criteria are not allowed to access banks.
Or you can be censored.
Yes.
I've had multiple sponsors I've worked with, one specifically where my bank would just not accept a payment from them. They wouldn't give a reason why. They just said, we are not taking this transaction.
Yes.
And then I also lost my bank account with Wise because one of my sponsors is a crypto company. And so they have rules that says we won't, you can't deposit on exchanges and we won't take money that comes from exchanges. Okay, I don't agree with it, but I understand why. They've gone a step further now. They won't accept money from a crypto company as a sponsor, which is weird. Yeah. So we're seeing more and more of that. And also we're seeing a lot more in terms of, I don't know if you've seen this, I don't know if you've seen it, but whenever I'm spending a certain amount of money, receiving a certain amount of money, I keep being asked to provide documents and prove where this money's come from. I've more recently, I'm having to supply examples of the contracts between the companies who are paying me. I don't know if that's new. Did I not even tell you that?
No, I've not heard that.
Yeah, so any significant sponsor, when I receive an invoice being paid by them, that gets put on hold, and I get asked to send both the invoice and the contract.
And a lot of this ties into anti-money laundering, know your customer, all these different regulations that the bank has to try to avoid doing money laundering. But it's funny because if you look at, over the past, call it 20 years, they paid hundreds of billions of dollars in fines for money laundering. Often knowingly, right?
Yeah.
So it's like that's part of the whole kind of flawed system, that there are groups that do money laundering, but then on the average person who's just trying to run a business, you're getting all your stuff totally surveilled. And in the United States, we have the Bank Secrecy Act. So if you could just come in with $10,000 and give it to the bank, they'll be like, well, where did this come from? We have to report this to the government. And that's a limit that never goes up with inflation. So back when that was put in place like 50 years ago, or whatever the date was, that was a much higher amount of money. But because they never increased it with inflation, $10,000 is not what it used to be. I mean, you could have sold a car and you're just putting money in the bank from it. And they want to know exactly where you got it and with this, and they report it. So basically, people don't really have any expectation of privacy when they're using this gigantic permissioned system.
Yeah, I don't. I think a lot of people have given up the idea of privacy now. And I think it's really good and important that Bitcoiners push it. But I think we've seen people come used to the fact that their data is getting hacked. The bank has everything, access to everything. I think when we hear about our phones being surveilled, I think there's just this massive kind of expectation that just happens, and people are just like, oh, huh.
And we put up with it in environments that are benign.
Yeah.
Right. So if you live in the United States or Norway or whatever, you're less concerned about that than if you're living in Russia, or if you're just living in more authoritarian countries. But even we even seen it, to some extent encroaching in developed countries, like we saw in Canada, for example. You had arbitrary bank freezes, things like that, that it's separate from the lawful process, freezing them. Like a judge said, for reasons X, Y, Z, we're going to freeze this until, this gets sorted out. Like someone stole money and it's going around court order and just freezing it unilaterally.
I'm bullish on Proton, by the way, as a company. I don't know if you use Proton now, and you maybe wouldn't say because that would be giving up some privacy. But they've expanded their tools recently. So they've now got a VPN they recently added. They've got their equivalent of a Google Drive. And I think they've added a calendar, haven't they, as well?
I've not seen that.
Yeah.
And they've had like a whole update, like a facelift. It looks really good.
Very bullish on Proton as a company, by the way, just as a side thing. Okay, so going back to Bitcoin, if we were going to design the ultimate payment network, how close do you think we're getting there with Bitcoin?
I think now that Lightning is usable and liquid and increasingly developed, I think we're getting pretty close. I think we still need better, we still need years of development to make it better and better. But basically, it's turning into a full stack network. Okay. And so if we go back to, our current system's layered approach, right? We don't all use Fedwire to buy things with. We use these layers on top, and then they settle with things like Fedwire.
So is Fedwire like the base chain?
Yes.
Okay.
And so when we look at Bitcoin and Lightning, Bitcoin obviously has limits on how much transactions can happen. And then also they're pretty slow. And so that's fine in some circumstances, but it's generally not a good thing for 1 billion people to buy coffees with, right? There's not enough throughput. And, if you're doing an in-person transaction, if they want to wait at least for confirmation time, they're going to be waiting for a while.
Yeah, sorry, Roger Ver. It's just we're not going to be doing this on the base chain. But there are some important characteristics of the base chain that make Lightning work. We have to create the best, hardest money first for the layer on top.
Yes, Lightning only works because the base chain works.
Yeah.
And so some of the initial designs of how to increase throughput were like, okay, we'll just add block size and block times. But then the problem is that individual nodes become so hard to run that you basically need to be a data center. You need enterprise grade bandwidth and storage to run a node. You basically turn into Visa, right? So if you increase that way, that's a problem. So the Bitcoin stack has instead gone vertical and said, look, we're going to keep the nodes small. Even if we try to change them, we can't, because you can't just push updates to users. They try the whole block size war. And so you have small blocks, small bandwidth, limited number of transactions, which is actually similar in size to Fedwire's number of transactions. Yeah. It's very similar to size of Fedwire. But then on top of that, you can have an arbitrary number of different transactions. You could just use fully custodial ones. Like if you use Cash App and you want to send Bitcoin to someone else, you can do that. But Lightning is interesting because you can still use it peer-to-peer while still getting that bigger throughput. So basically, it's channel-based instead of broadcast-based. And of course, Bitcoiners know this, but I think the broader investment community is still very unaware of how Lightning works.
Yeah, I think you should just dig into explaining what channel versus broadcast-based is.
So if you think about it, broadcast is extremely inefficient, right? So with Bitcoin, every time you do a transaction, that propagates around the entire network. Thousands of different nodes record that for the rest of human civilization or however long Bitcoin lasts. Do you want every coffee transaction? Is that a coffee transaction so important that it needs to be like part of like global ledger? Imagine if every time you send an email, every email like server in the world had to like agree that this email was sent.
Yeah,
that'd be grossly inefficient for billions of emails. And so instead, channel-based says, okay, so we're going to open a channel with a base layer transaction. And then this channel is now funded. And then you can send individual payments over that. And the software keeps track of that. And at any time, you can settle that back down to the base chain. So it's not based on debt or trust, unlike, say, a bar tab. But a bar tab is a common analogy. Imagine if you opened a bar tab. So you have a moment of friction when you get your card out and you open the bar tab. And then every time for the rest
There's
of
no friction.
yeah.
I'll go straight in there.
Originally there was.
Originally.
Yeah. So then you can keep doing payments over the whole night.
Yeah.
And then, eventually at the end of the day, you settled it.
Yeah.
And so basically Lightning is doing that on Bitcoin, but it's all contract based. So it's not trust. You're not trusting the other person. You're only trusting the code itself. And so it solves multiple problems. One is that, you can scale far more payments without scaling the base layer. And then number two, you can have a far more private and fast type of transaction. Lightning basically happens in split seconds rather than, you have to wait for, 10-minute average confirmation times. So for anyone who uses Lightning in practice, you have your wallet on your phone and you can send money and receive money instantly.
We do get some inherent privacy benefits with the Lightning Network, which maybe we don't have on the base chain.
In part because it's not broadcast to the whole network.
Yeah.
Especially the sender has some privacy benefits. And I think that's still one of the areas of contention, to figure out how to make it more private, because it's always a cat and mouse game. There's surveillance companies that can open a bunch of nodes and then try to, as they're routing payments around the network, ironically contributing to the network, they're also trying to surveil, trying to figure out where points are going. But it is much better inherent privacy than the base layer and can be used in a very private way. And I think it keeps getting better over time in terms of privacy.
Have you, as part of your paper, looked at the growth of the number of payments on the Lightning Network and compared that to, say, the base chain? And, have we seen over time that there are transactions that would have originally been on the base chain that are moving to Lightning?
So Arcane Research published a really good report on that. I believe it was April of this year. I actually wrote the foreword to that, but they basically have this whole large document of tremendous research, and they try to estimate. Because the thing about the Lightning Network is, unlike the base layer, there's no firm number you can go to and say this is the number of payments.
Okay.
You have to piece it together because there's some degree of privacy. So you're trying to piece it together and come up with a rough number of payments. So they've actually found that payments have actually increased even more than you think, looking at public capacity on the Lightning Network. So you've had hundreds of % increase in Lightning payments over the past 12 to 18 months.
Wow.
Yeah, it's been a very fast growing. And then especially if you factor out exchange withdrawals and things like that, actual actual payments to merchants, they have a pretty high estimate for how that is.